Welcome to the 3 in 10 podcast. I'm Scott Slayton, partner and chief strategist at Capital Creek Partners. In each episode, I'll give my brief perspective on 3 things we think market participants need to know this week, and we get it all done in 10 minutes or less. For additional resources and analysis, please visit our website at capitalcreek.com. Here are the 3 things we're going to discuss this week. First off, the key investment takes from the One Big Beautiful Bill Act, known as OB3. Number 2, Delta Airline earnings. What did we learn on this earnings call? Well, we learned about consumer segmentation and dynamic pricing. And finally, with the S&P 500 at new all-time highs, we revisit our target, our long-held target, since we unveiled our investment outlook for 2025, and a target of 63.50, which has basically been achieved. So back to the One Big Beautiful Bill. What does this mean for investors? Well, we think this is a seminal victory for President Trump, Speaker Johnson, and Leader Thune. This was a very large, complex piece of legislation that we thought would have a much harder time getting through the legislative process. And you just have to tip your hat to the president by somehow disciplining a very raucous House, a Senate that seemed to be far apart from the House and what they wanted, and razor-thin majorities in both chambers. And not only did he get it passed, he got it passed right on time. So I see shades of Trump doing a lot of what Nancy Pelosi was able to do and really control the Republican caucus and get them to do what he wants them to do, very much like Pelosi was able to do in the House for 20, 25 years, really instill discipline. So you have to be impressed with how that got done. Now, what about this bill is important for investors? We think the most important thing by far is that it makes permanent the 2017 tax cuts. And at the margin, it makes them even more generous. So this is good news. It's the absence of a potential huge negative that if the tax cuts were to sunset at the same time as we're getting tariffs put on, that would be a double whammy for the economy and could have put us into recession. That risk has been taken off the table. It front loads some of the new tax cuts on tips and overtime. Those aren't really big, but they do add at the margin some stimulus. $150 billion for defense and shipbuilding, and cuts, meaningful cuts to Medicaid, $1.3 trillion. These cuts don't hit until 2027. So they're a ways off. So in the near term, we're not going to feel the pain of those cuts, of course, until after the midterm elections. But another thing I think is very important is that the debt ceiling being raised to $5 trillion, it takes this thorny debt ceiling issue off the table until probably 2028. And that's just another absence of a negative. We don't have to deal with the brinksmanship, the political theater of the debt ceiling, and possibly making a grave mistake, missing an interest payment, calling into question the full faith and credit of the U.S. government, which I think we really don't want to do, especially when we have to issue this much paper every single month, many billions of dollars of paper every month. So it's a little more stimulative than we expected. Some of the economists that we really respect are putting the net stimulation relative to GDP around 0.2 to 0.5. That's meaningful. It somewhat sterilizes the headwinds of tariffs. I don't think it fully sterilizes that or offsets that, but it's a positive. And the cost here looks to be, the estimates are very wide. I've seen cost estimates between $3.5 trillion on the low side and $5.5 trillion on the high side. Longer term, I think this is a clear negative, but I don't think it really affects much in the near term. It's really a missed opportunity by the Republicans to deal with the largest risk to the long-term health of the U.S. economy, and that is just our gargantuan fiscal deficits that we run year after year. So that's my take on OB3 and what it means for investors. Secondly, on Delta earnings. So the earnings season is just kicking off. And when I saw Delta stock rise 12%, I thought, I better listen to this and understand what's going on here. And what I discovered is that the high-end consumer remains very strong. The low-end consumer remains weak. The middle-end consumer is kind of lukewarm. So I described that as status quo. Delta described the U.S. economy as solid and the consumer in good shape. What I thought was most interesting was the dynamic pricing, their ability to use artificial intelligence to extract more pricing power out of their customers. And I think we're going to just see more and more of this ahead across consumer companies using AI to maintain their margins or increase their margins by just being smarter and smarter about how they price their goods and services. Delta said they're going to continue to segment the passenger cabin more and more, growing the number of premium seats, shrinking the number of economy seats. That makes perfect sense if you're trying to maximize profits. Their earnings guidance was very wide due to policy uncertainty and just all the uncertainty that's out in the global economy. But I was pretty impressed. They raised the dividend by 25%, and you don't do that unless you have confidence. And the cash flow guidance from the company was, I thought, very strong at $3 to $4 billion for the full year. So on to our final topic, which is the S&P 500 at new all-time highs, basically right at our target of 6,350 for the full year. This caused us to think about where we are right now. Are we willing to raise our target? Are we willing to raise our estimates? Are we willing to be even more aggressive on the multiple? And I think the answer to all three of those questions is no, we are not. So we are not going to raise our target at this point. We think that complacency is beginning to creep into the equity market here at all-time highs. The president, in our opinion, is feeling emboldened by strong stock prices, by the passage of OB3, by calm treasury bond rates, which are right in the middle of the range around 440, and by low inflation. The truth is so far that the tariffs have really not flowed into the inflation statistics like many feared. And I think what's happening here is the tariff threats are escalating in terms of magnitude and number. And in some cases, dramatically. A 50% tariff on Brazil is pretty heavy-handed. 35% on Canada, pretty heavy-handed. We don't really know where Europe is. That's been the quietest of all these major negotiations. But I did read this morning a 15 to 20% blanket tariff, which to me, it's not Liberation Day crazy, but it's not good. It looks like the market is pricing around 12 to 15%. I would say even the low end of that. And I just think that equity investors, taco is being taken too far. The belief that the president always chickens out and comes back. Well, that might be true, but the president chickens out after the markets go down big time. And we're not priced for that. We're not ready for that. I think complacency has crept in. This 50% tariff on copper to me seems especially irrational. We don't produce a lot of copper domestically in the United States. We import a lot of copper, and we're in a housing recession. A lot of copper, it's one of the primary products that goes into building a house. Not to mention data centers, which we're building as fast as we possibly can. Why would it make sense to put a 50% tariff on a product that we don't have a lot of domestic production on? I don't get it, but I think it's a sign of the president feeling emboldened again. The VIX index hit its lowest level since February. I think that's an indication of complacency. And we're now halfway through July, which is the best month of the year statistically in the last 20 years. And we're heading into the worst seasonal period of August and September. So could a 2, 3, even 5% correction be on the horizon? I think absolutely it could be. I think that's squarely on the table right now. It is a bull market in our opinion, a relatively young bear market. So if we get a significant pullback, I think you buy it. but we just want to put that out there as something that's on our mind. So there you have it, your 3 and 10 podcast for July 11th, 2025. And as always, do the work, endure the pain of gain, and have investment courage.